Hello, hello. I know it's going to take a while for people to get on here, so I'm popping on and I'm trying to pull it up on my computer as well. Let's switch glasses. Let's see. We'll see. Aha! There's a couple of you popping on. Hey, as you pop on, please let me know that you're here. Tell me your name or leave a comment. Let me know where you are from. I'm just kind of messing around here trying to pull it up on my computer. Hi, Janet. Hi, Kay. Oh, good. Can you guys hear me and see me okay? That's always my biggest fear when I do Facebook Live. Ooh, sorry, my table's kind of jiggly, isn't it? Hi, Penny. Those of you popping on, someone let me know if you can hear me and see me okay. I would very much appreciate that. Loud and clear. Awesome. Thanks, Penny. Oh, so many details to get done here. Let's see. We're going to turn our phone on Do Not Disturb. I don't want phone calls. Oh, yay. There's like 11 of you on. We're going to just kind of chit-chat here or hang out for about a minute or so. Give some other people the chance to get on. I want to make sure I can somehow watch your comments. So this is going to be one of those Facebook Lives that I'm going to do what I don't like to do. And that's, well, I'm not going to read it, but I'm going to look down at notes a lot. I have like 8 or 10 pages of notes here. But because there was so many things I wanted to talk about in regards to our topic today, I thought I'd better do notes to make sure, number one, I stay on track, because I'm one of these people that can really easily go down rabbit trails or squirrel. And I don't want to do that because I do have a lot of I call it good information that I want to share with you all. So let's see here. I am going to try my very hardest to kind of watch for questions, but I'm going to ask you guys to maybe hold your questions, and every once in a while, because there's so much information here, I'm going to like pause and say, okay, if you have any questions, let's take a minute and address those, rather than constantly stopping and answering questions. And what happens if you've ever done a Facebook Live before, and I'm like, stuff scrolls through really fast, so I don't always see it. And so we'll kind of take a few breaks, and that's when we'll ask questions and we'll try to address them. And then at the very end, I'm going to give you a chance again to ask questions in case I missed your questions. So if I miss your questions, please don't take it personally. It is just super hard to stay focused on information and questions, and I'm watching my iPad, I'm watching my computer, and I'm trying to get my computer to show up a little bit bigger so I can really see questions, but I'm not so sure that's working either. So, okay, let's just wait. Let's give it just about 30 more seconds to get people to pop on here. Looks like some of you guys are. So, okay, Okay, so I think I kind of posted a little hint what I was going to talk about today. And it's one of those subjects that no one likes to listen to. And I know a lot of you guys that can call yourselves hobby demonstrators. I've got information for you guys as well. So this is not like what I want to call a business talk. It is in many regards, but it's really for all of us that are Stampin' Up! Demonstrators. I get asked all the time tax questions. How do I keep records? What do I have to do? How do I, being a demonstrator, how does that affect my taxes? And just kind of that whole umbrella when it comes to taxes and when it comes to keeping good records. Because those things are really intermixed. Because if you keep good records, and then when it comes tax time, easy peasy. And if you know me, I am all about easy peasy and keeping it simple. And I'll tell you what, tax time is very simple for me. And I hear demonstrators all the time when it's getting close to tax time, help, I'm spending days and days and hours and I have such a mess and all that. It's like, 10 minutes, done. Well, 10 minutes into the accountant. So we'll clarify that. Now, before I really dive into what I have to share with you guys, a huge disclaimer. When it comes to talking about taxes and what you can deduct and what you can't, and the IRS and how to do the forms and all of that stuff, I am not an accountant. I am not an expert. Half the time I don't even know what I'm talking about probably. I am going to share with you some of the things I do, some of the stuff I've researched, but for the most part, and I will say this several times throughout, if you have questions about taxes, if you have questions about how to do the forms, what you can deduct and all of that, beyond the very simple basic things I'm going to talk about today, you need to ask a professional, a tax accountant or whoever does your taxes, or research it or whatever. I always hesitate talking about this subject to anybody because I just want to make it very clear. I am not giving you tax advice. I am not telling you what's right or wrong. I'm not telling you what to do. I'm going to share some things so that you can formulate your own opinions on things, for lack of a better term. Now, like I said, if you're just joining us, I do have a lot of notes. I'm going to look down a lot. I hate doing that. I'd rather look at the camera, look at you guys. But there's so much I want to talk about. I need to make sure I hit all of these points, or when I'm done, I'm going to be like, dang, I forgot to tell them that. So, disclaimer, we've talked about that. You know, the other thing, there's changes every single year. And I mean, I'm thinking our country's going down a road where there's going to be a lot of changes when it comes to tax laws. So that's why, you know, nothing I say is the law. Got it? Promise me you're not going to come back and say I gave you bad tax advice, because I'm not giving you any advice at all. So, you know, I mentioned hiring an accountant or ask your accountant. Don't let that scare you. You know, if you're in here for the hobby, just because I said get an accountant to do taxes, don't run, please. Stay with me. You know, for many of you, this is a hobby. Many of you are. Or maybe it's just a very small business for you. Maybe you're just, you know, trying to sell enough to make enough money to pay for your own stamping expenses. No matter what the case is, as long as you keep good records, not a big deal. If you already do your own taxes and you're trying to do a small business here, easy peasy to do your business taxes as well. Or maybe you go to a place like H&R Block, or I don't know what all those different places are out there, and they do their taxes. If you're just running a little tiny small business, easy peasy for them to do too. But the key is you have to have good records. And that's a big thing that I'm going to talk about today, is keeping good records. Because that's how, at the end of the year, in 10 minutes, I can have my stuff ready to go to the accountant. So before we dive into records and keeping good records, I want to talk about a question that I think everybody needs to answer for themselves. And this is going to kind of determine your path when it comes to what we're talking about today, keeping records and tax receipts and tax forms and so forth. But that question is, from the IRS perspective, are you a business or are you a hobby? Okay. Now, notice I didn't say hobby demonstrator. Okay. We're thinking IRS. When the IRS looks at you and what you're doing, are they going to consider you a hobby, or are they going to consider you a business? Okay. You know, I know we all start as a demonstrator for a variety of reasons. Some of you just came for the discount, and you will always stay for the discount. Like I said, some of you want to earn a little money, and then there's others of you that, you know, are either diving into this or you've been in it for a long time, and your goal is to really make this a job, whether it's, you know, more than part-time, full-time, whatever it is. And when the IRS looks at you, how are they going to look at you? What are they going to put you in? So, I'm sorry if this sounds kind of jagged and all over the place. So just kind of stick with me, and I think it's all going to come together. But I've often heard, and I just cringe when I hear this, that people, and I'm not saying it's even any of you guys or any of us, but I hear demonstrators try to recruit people, okay? Join Stampin' Up! For the tax benefits. You can write off your hobby. be really careful of statements like that, because that's not necessarily the case, okay? Now, you can write off a lot of it in many cases, but in many cases you can't. Those tax benefits are going to come to you when you're running this as a business from the IRS's standpoint. If you're just here for a discount, great, we love you, but you can't really deduct your stamps. So a hobby is totally different in the eyes of the IRS, or a hobby is totally different than a business in the eyes of the IRS. So here's some questions, and I did some research on this. And if you just Google, how does the IRS look at, what do they consider a business? What do they consider a hobby? Some of the things that really jumped out at me, and I believe, these are some great indicators. Okay, you're a demonstrator. Do you, and you think you have a business, okay? That's how you want to go this route, because you want to deduct everything. So one of the questions the IRS is going to look at you and say, do you work it like a business on a consistent basis? I mean, you can say you have a business and I'm going to write off everything because I'm going to see Aunt Sally twice a year and she's going to buy from me, okay? You're kind of walking a line there because you're not treating it as a true business, working it on a consistent basis. Same thing with like posting on Facebook. Do you post once in a great while? Hey, I sell Stampin' Up, buy from me. But that's all you really do? I don't think the IRS is going to say she's working that as a business. Next thing, do you keep diligent records of all your income and your expenses? Because a business would. So if you're a business, you need to be doing that. And we're going to talk about some of that in a little bit. Or you just kind of willy-nilly at the end of the year guess, I spent about this much money. Okay, we're kind of walking that line. Are we a hobby or a business? Now remember, when I say hobby, I'm not saying hobby demonstrator. I'm saying hobby. Some people, farming is a hobby. Quilting is a hobby. There's all kinds of hobbies. And that's what we need to distinguish here. Does the time and effort that you put into your business indicate that you intend to make it profitable? Keyword there, intend. We're not always profitable. But are you doing things based on your time and your effort that shows that your intention is to be profitable? Now again, this is what the IRS is looking at you, how they're looking at you. Do you change what you do to become profitable? Okay, so if you're not profitable year after year, are you making some changes that really indicate to the IRS, hey, I'm trying, I got a business here, I'm trying. It's okay to have an occasional loss, but it's not okay to not make changes if that's all you do is have a loss. An interesting was, are losses beyond your control or from starting up? Okay, starting up is a great one. You become a Stampin' Up! Demonstrator, you jump in, you're going to run a business, you're going to have a lot of expenses that first year or so. You're going to show a loss. Not a problem. You can show you're starting. Or something beyond your control. Your computer dies and you have to buy a new computer and you use it solely for business and you write it off. That's a one-time, once-in-a-while expense. You might show a loss. Okay, that's, different than I just, kind of willy-nilly didn't work much this year. And then a good rule of thumb, and again, I don't think this is a hard and fast law, but you hear people say this all the time, is once your business is up and running, okay, you're going along, a good rule of thumb is that if you can show a profit in 3 out of the 5 past years, generally indicates that you're trying to run a business here, okay? Now, you heard me talk about losses there, and sometimes when I say that, show a loss or profit 3 out of 5 years, the other years you show a loss, I know some people freak out at that. Or maybe better said, if you tell your husband you showed a loss this year, ooh, how many of them are going to be like, you're spending way too much money on this stamping thing? Honestly, from a tax perspective, a loss can be a good thing. Now, just because you show a loss on a tax form doesn't really always mean you lost that money, so to speak. It's because of expenses that you can write off and so on and so forth. But a loss can be a good thing because it will decrease, in most cases, decrease the income that you may be paying on your taxes from other income. Okay, so if you work another job or your husband works or whatever, a business loss can sometimes offset some of that income. So it's a good thing. That's where the IRS says you better show a profit 3 out of 5 years, so we know you're really trying and you're not just in this for a loss to avoid taxes, because that's not the right thing to do. So, so a loss can be a good thing. Now, there's also many benefits to having a home-based business that people that work on their own or work at a regular job don't get. So if you're really in this for the business, make sure you understand some of that stuff. Do some research. We'll talk about a few things later, but I'm being very vague because I don't want to give advice, and that scares me. So, okay, ask yourself those questions. If you determine you are a hobby, not hobby demonstrator, you are a hobby. You are a Stampin' Up! Demonstrator because stamping's your hobby. You are just doing this to buy at the discount, buy your own stuff. Maybe Susie Smith, your Stampin' Buddy, orders from you, you know, a little bit here, a little bit there. It is truly a hobby. In that case, you don't have anything to do. You don't have to worry about any of this, okay? You do not deduct expenses. You do not show income. You don't have income. And don't let people tell you because you're a Stampin' Up! Demonstrator, you can write off all your stamps, because that is not always the case, okay? So if you are truly this is a hobby in the eyes of the IRS, no deductions, no report of income, no nothing. Buy your stamps, stamp, have fun, share cards with people, whatever, okay? Don't get all worried that, oh my gosh, I have to do taxes, because you probably don't. Now, if this is your business, it is your responsibility to report all of your income. But the great thing is we can offset that by expenses, by keeping track of and recording and having records of our expenses. That's where the advantage comes in here. Okay, so we determine you're a business. Now, I've said it, you've heard me say it here several, you know what? Let's take a pause. I promised you at the beginning I wasn't going to really watch for questions because I wanted to make sure I share everything I want to share. I'm going to pause for about 30 seconds because there's such a delay with Facebook here. And if you have questions, go ahead and type them in now. Anything that I've said so far, if it's triggered a question, let's chat for just a minute here and then we'll get back to all my pages of notes. Set. Nobody has questions. Either you've like checked out because we're talking about stuff that's not fun to talk about, or I'm doing such a good job explaining it. Okay, we're going back on here. You know what, since nobody has commented in a long, long time, can somebody just leave me a comment? Let me know that you can still hear me. Let me know that you're still out there and with me. Someone, please? Anyone? Okay, here we go. Quick question. So if we join during the extra time, we have time to build our business. I'm not quite sure. We'll talk. We're gonna have to talk separately about that. I'm not sure what you're doing. Okay, you guys are hearing me. We're going on. Okay, keeping records. So you've determined this is your business. I want to talk a little bit about keeping records. Because good records is essential, and it also makes life way. Oh, now we got questions. So what card class? So if you do card class 1, what are you? I'm not going to tell you. Oh, questions are really popping in now. Hold on. Maybe there was that big of a delay. So what if you do card classes once a month? What are you? I'm sorry, I am not going to make that determination for you. That is your call on that. Go back to some of those questions and see if you fall in it. So, sorry, I was afraid this was going to happen quite often, but I can't. Or ask a tax professional, okay? And it might seem a little bit more clear when we get into keeping records. Some of this may come together. Okay, keeping records. See, my notes even say, again, ask professionals for help. Okay, so let's say you've determined you are a business. You're going to keep good records, and at the end of the year, with your taxes, again, in most instances, you're going to file what's called a Schedule C. What would you include gas receipts for your car? Charlene, that again, ask someone else. We'll talk a little bit about expenses and how I record them, but if you're not sure, some people take gas receipts, some people take mileage. And again, you have to be a legit business to do that. Okay, so Schedule C, again, don't let that scare you. If you're a person that does your own taxes, your husband does your taxes, you do them or whatever, a Schedule C is a super simple form to fill out. It's just added as part of your regular tax forms, okay? It's very easy. There's step-by-step instructions. There's instructions all over on the internet how to do it. It's not a big deal, but again, the key is keeping good records. We're going to talk about that. See, I'm making you stay with me. I'm going to tell you how I keep records. Again, or if you have someone do your taxes, a professional of some sort, they totally know Schedule C, piece of cake. So I want to share with you guys my super simple way that I keep records. Now again, I don't want to go into all the what you can deduct and what you can't. Okay, that's an accountant's job. I'm not trained. But I will tell you, for probably the first 10 years, I've been a demonstrator almost 25. For the first 10 years, I did all of my own stuff. And I was a business out the gate, okay? But I did my own Schedule C. We did our own, was it 940, 941? I don't know, whatever that is. And then, and it's probably been 15 years ago, I actually incorporated my business. So a lot of the stuff that I'm telling you guys isn't even applicable to me at this point in time. I'm not sure where the other Creative 8 people are, but when your business starts to grow and you're making a great income out of it, at some point there's tax benefits to becoming a corporation, and that's what I am. So, but I keep records the exact same way anybody that has a small business and does a Schedule C. So follow me here, and I'm going to try to take this step by step for when I keep records. My number one rule is I keep it simple. Surprise! Jackie keeps it simple. I do not get bogged down in every single little penny spent here, penny spent there, kind of to a degree. Okay, that I probably should forget that because that's going to confuse you. Okay, so I'm not going to get bogged down in every single detail, and I guess that means more. Is there a category for what I spend on ink pads, and is there a category for what I spend on paper, and what about what I give this customer and all that? I don't have a bazillion categories, okay? The main principle, and if you don't remember anything else that I tell you, when you're keeping records, keep in terms of cash in, cash out. Everything we do, there is cash in and there's cash out. It comes in, it goes out. It comes in, it goes out. That is bottom line, okay? So all we have to do is keep track of everything that comes in and everything that goes out, okay? That is the simplest concept, the simplest way to just bring it home to keep it simple. Now, before, I think this is why I need to check these notes. So, cash in, cash out. The absolute easiest way to keep track of this, okay? I've done it for 25 years. You have a separate checkbook and you have a separate credit card that are designated only for Stampin' Up. Nothing else. So checkbook, credit card. These are for your business. Now when I say that, and I worked at a bank for many years, so this I can say with confidence. Most banks will have guidelines and rules as to what a personal account and a business account are. Business accounts are expensive. Business accounts there's just a lot more stuff to do with them than just your, free checking. You can go to almost any bank and get a completely free checking account. That's probably good enough for you, okay? In your mind, that account is your business account. But don't go in the bank and say, I need to open a business account. Because if you're a small business and you're running it, you're doing a Schedule C for your taxes, you're just what's called a sole proprietorship, you don't have a tax ID number, you're just using your social security number, you can get away with just that free cheapo checkbook. But in your head, make it your business account. The same with a credit card. I cannot stress anymore, I guess just from the bottom of my heart, that is so, so critical in being able to keep good, simple, easy, accurate records. Okay. So again, everything I pay out goes on my credit card. Now, you could pay stuff out of your checkbook and use a debit card. Figure that out yourself. But for me, everything I pay out goes on a credit card because I have a credit card that earns me miles. So when I go to a Stampin' Up! Event, and this has stood true for 25 years, I always earn enough miles on that credit card to buy my plane ticket to go to a Stampin' Up! Event. So, no, Cindy, don't do that, please. Unless, my personal opinion, don't do that, okay? So, sorry, I wasn't going to read comments. We're going to come back to comments. See, it gets me distracted. Okay, so, again, this is the way I do it. This is my super simple way to do it. Everything goes on that credit card. I earn miles, but it's all on the credit card. Everything that comes in deposits into my checkbook. Credit card bill comes, checkbook pays credit card. Whatever's left in the checkbook is money I made. Now, if I want money, okay, I just write myself a check out of that checkbook. Way back when I was just starting out, my business was small, credit card, checkbook, Stampin' Up! Money came in checkbook, I paid credit card, then say I had $100 left in here at the end of the month, I wrote myself a check for $100, okay? Great paper trail of everything I was doing because now I can have a register that shows everything I spend on my credit card, everything I pay out on that checkbook, easy peasy. It's all about keeping it easy peasy. You got complete separate records. I pay for everything on that credit card. If I go to the dollar store and buy 2 items and it costs me $2.12 or whatever, I will use my credit card. That's my record of everything. Anything that I know I can claim as a business expense. Okay, checkbook, everything comes in. When I say everything comes in, I'm talking about payments from customers, for orders, for classes, you sell retired product, you sell tutorials, whatever you sell. Okay, if money is coming in, it's going into that checkbook. That includes any commissions or anything I get paid from Stampin' Up! So if you can just wrap your head around the fact we're keeping track of everything that goes out and everything that comes in. And sorry if I sound like a broken record, but I just, I know people struggle with this, and if you can keep it simple, it's easy. Okay, talk about just paying yourself out of there. Now, we got to keep good records, okay? I use Quicken. Quicken is really designed for homes. I don't know, they might even have a business version of it. I buy the cheapest Quicken there is. I think now you have to pay like a month or a yearly expense to have it. Years ago, you used to buy it and it lasted forever. You don't need the business version. You need the cheapest one you can have, just plain old Quicken. But again, I'm going to come back to that. It is so critical to keep business and personal separate. It just makes it easy. So when I set up my Quicken, I set up an account in there for my credit card, an account in there for my checkbook. Okay. And again, I'm just sharing what I do. I do not link them. I do not link them to the bank. And now, we can have all that stuff just automatically show up in Quicken, what happens in the bank and all that. I tried that and I really struggled with that. I was much better basically using it as a register, which means if you just want to do this on pen and ink or pen and paper, you can do that as well. But the whole idea here is we need to just record every single transaction. So if I'm using my credit card, every time I use it, I get a receipt. The next time I sit at my computer, I enter that receipt into my credit card register. At the end of the month, the credit card statement comes. I reconcile that register. I pay the credit card in full from the checkbook. Bam, done. So I really just have different categories set. You know what? Let's stop right there before I go into categories. And I see some questions. I'm going to go back and see if I can read some of these. Cindy, I think I got distracted when I saw yours. You know what? Use your personal account if you want to with a different register. That's entirely up to you if that works for you. Okay, I'm simply sharing what works for me, and in my simple mind, kept things as simple and separate as possible. Plus, checkbooks are free, credit cards are free, so it's not like I'm adding an expense here. Sue, some credit cards will category. Yeah, I know some credit cards will categorize expenses. Most of them do. I don't like the categories. So again, that's why I want to just record everything myself. How do you figure expenses for your tutorials? Can't say there really is any expenses. I don't think I really do. Do I use PayPal or Square or what when you do kit classes? That's a whole nother conversation. I use PayPal because everything I do is online. PayPal, you cannot charge a person. Like if someone walks into my house to do a class and they say, here's my credit card, you can't do that on PayPal. So I don't know, there's all kinds of options out there. Okay, think I'm caught up? Let's go on. Categories. I said, I set up all different kinds of categories. I'm going to give you just a couple of the categories that I use for recording both income and expenses. Let's talk income first. So I'll have a category called cash sales. Easy. Why call it anything else? That is going to be the money I receive from customers for order. I go do an event or whatever, customer buys an order, they hand me $35.93. I come home, I deposit that exact amount in the checkbook, and it's recorded as cash sales. Classes, again, money people hand me. Again, this is income. Just think of it. Anytime someone gives you money, I don't care if they give it to you via a credit card, via PayPal, via cash, via check, however, if it's mine, it's come to me and I am going to record it. I'm going to deposit it and record it as an income. When you get checks from Stampin' Up, as your business grows and you start getting a monthly check, you're going to have volume rebate, you're going to have downline overrides, bonuses, that kinds of stuff. I just put a category for each one of those under income. So I get a check from it's not even a check. A deposit from Stampin' Up. I go in, I put it into my checkbook register, and I like to just break it down from volume rebate, downline commissions, bonuses, so I can kind of see what they're paying me for. The other money we get as income, Stampin' Up pays us, I don't even know if it's once a week or how it's figured anymore, but they, if you have someone place an online order, you will get that 20% or 25%, Stampin' Up will give that to you because the customer pays full price. Okay, you're not keeping that instant income up front. And I think there's a dollar amount. Like if you get one person that places a $10 order, so Stampin' Up technically owes you $2. I don't think they send that like the next week. You have to have accumulated so much that they owe you, I think. But we're not going to talk about that. Okay, deposit it, record it. Same thing with expenses. Every time I charge something, it's on the credit card, whether it's to a store, to Amazon, too many Amazon charges, or to Stampin' Up. It's paid for with that credit card, and then I record it in my register, and I've just made categories like advertising, postage, office supplies. We need to buy pens and paper clips sometimes. Stamping supplies, make categories that work for you. And then The one category that I do want to talk about, make sure you understand this, I call it, and this is actually an accounting term, cost of goods sold. So when I place an order with Stampin' Up charges my credit card. When I record that transaction, I'm going to record it as cost of goods sold. Okay, it's money I've paid Stampin' Up basically on behalf of a customer. Okay, that's for a customer order. If I'm buying supplies from Stampin' Up, I'm going to record it as supplies. So cost of goods sold is what you're paying Stampin' Up for something that's going to a customer. Okay, pause. Whew, I feel like I've been rambling forever here, guys. Any questions? I'm going to give you just a second here to pop in any questions. Last time I didn't wait long enough, then I started talking and questions started popping. So I'm going to give you a second. Give me some water. We're almost done. Okay, not seeing anything here. Okay, so I want to go through kind of a number example for you that maybe it'll bring all of this back home here. You might want to grab paper and pencil and even jot down some of these numbers because I'm a visual person. It might make more sense if you see the numbers. So let's say you go and do an event and you get orders, and I'm using really rounded numbers here. So with tax and shipping and all of that, it's $525. And out of that $525, okay, Cindy, I'm going to have you come back to that. I want to keep going here. Where was I? Okay. So out of that $525 of those orders, $400 is given to you in cash or check. Either one doesn't matter. So that leaves another $125 in orders that your customers at this event are putting on their credit card. So you're not keeping kind of your instant income in that. But, so I come home, $400 cash, $125 that's going to Stampin' Up, essentially. I'm not even seeing it. So it's no money in to me at this point. You're going to record $400 as cash sales. That's what you have. You're going to deposit $400 into that checkbook. Deposit that as cash sales. That's how you're going to record it. That's what you got. Remember, you have control of it. It's yours now. The other $125, I never see it, okay? I just kind of have their card number and I'm sending it to Stampin' Up. I'm not going to record anything on that because I don't have anything. Nothing is mine. But at a later date, I am going to get a payment from Stampin' Up for $25, okay, which is the instant income portion of that. Okay, that's that like every month or weekly or however often they pay it. So when Stampin' Up pays me that $25, I'm now going to enter that into my checkbook register because that's where it's going. And I call that online order income because, I didn't get like the full amount. I only am getting that much, but it's a deposit. It's money in. Remember, money in, money out. This is my money in. $400 and then $25 at a later date. So don't record it until it comes in. Cash in hand, record when you receive. Now I go to place the order. And, I'm doing all the individual orders. Customer A, let's say that $125 was an order from one person. I put it in. I put in their credit card number. Stampin' Up's going to charge that $125. I never got it. I never sent it. So that's going to leave about $400 in orders that I have to pay for. Okay, customers gave me $400, but Stampin' Up's only going to charge me $320. Now don't do the math. I think this works out. But they're only going to charge me $320. So that $320 is cost of goods sold. That's money I'm giving to Stampin' Up. Cash in was $400, cash out is $320. So my expense is that $320. The $400 is my income. Okay? pause, because I tried to make simple numbers here for you. Let's look at questions. Do you actually record your instant income if it is for stuff you buy for your own supplies? If you buy for your own supplies, there was no instant income. You know, and I think that instant income is kind of a misleading term in many ways, because if you buy stuff for, let's say you have a $100 order retail, but you're only going to pay $80. The only thing I worry about is that $80 I paid. There was no $100 paid to Stampin' Up. There was no $20 coming into my pocket. It was simply $80 going out. $80 going to Stampin' Up. Cindy, someone pays me for their order with a credit card and I pay Stampin' Up. It's cost of goods. I think you asked that and I started talking about this. Hopefully what I just talked about explained that. Because when they pay you with their credit card, you have no money. They haven't given you anything. You don't have anything. It's not yours. There's nothing to record, because that you're taking essentially just a credit card number and passing it over to Stampin' Up. Let them charge it. What you're going to record is when Stampin' Up sends you that instant income that you don't get with it. Oh, simple, simple, simple. Keep it simple, but keep it consistent. Record these things as you go. You know, when I hear of people saying they just spent hours and hours and days doing taxes come, you know, April 10th, I'm like, why? If you keep your receipts, you record them as you go, save everything. I just have a file cabinet with 12 folders in it, January through December. As soon as I record something, I just file it, whether it's a receipt or it's a statement from Stampin' Up or it's an order form or anything. Everything goes in January. Everything goes in February. If I ever have to go back, I can just find the month's folder on that. So now, at the end of the year, many of us will get a 1099 from Stampin' Up. This is always another confusing thing, because a 1099, I believe, and again, this is to the best of my knowledge, they only issue a 1099 if they have paid you $600 or more. Okay. Now, that $600 is made up of downline commissions, volume rebates, cash bonuses, flex point items or trips. Okay. That 20% instant income, and again, I just hate that term because it is very misleading in many ways. That 20% that you keep up front, Stampin' Up did not pay that to you. Okay? It's not income from Stampin' Up's perspective, which means it is not on that 1099. Okay? So that is your responsibility to report if you truly made that 20%. But that's where that instant income, you will not see that any place on my taxes or on my records, because again, it's all going back to what did I take in, what did I take out, send out, give out, whatever. You know what I mean. So that 1099, you know, for those of you that are in your mind a hobby demonstrator, and you know you're not really doing a lot, sometimes people are afraid, you know, what if Stampin' Up reports income, then I have to report it. Keep in mind that that's $600. So let's just use a number that if you place orders totaling about $6,000 in a year, okay, that breaks down to $500 a month. You're going to have instant income over $600, but that instant income, Stampin' Up does not send a 1099 on. Chances are you are not going to get a 1099, okay, unless you had all that other stuff, cash bonuses and downline overrides and all of that. So that instant income's our responsibility, but it's not, in my mind again, there's no place that really says or shows an exact dollar amount of instant income. It's all rolled into that. I reported all my cash in, all my cash out. We talk about Schedule Cs. It really truly is, easy to do as long as you're keeping good records. And I kid you not, when I'm diligent and when I keep good records, at the end of the year, when it's time to do taxes, and I do have an accountant that does mine, but my part of it, getting ready what I take to the accountant, takes me less than 10 minutes. Because all I have to do is print out my reports off Quicken that will show what I spent in every category and what income I took in every category. And that's what it's all about. You don't want to spend forever and days and hours and be frustrated. But if you keep good records as you go, you won't have that. Now I've talked about, some of the expenses are real simple. Postage, and we talked about some of those. But there's some other things that, especially as your business grows and you're running it more and more as a business to make money and it's growing, there's a lot of great benefits of having your own business, working from home. Again, an area you need to go research or ask for advice on, but quite often you can deduct a good part of your meals out. There's some rules with it, but that's a great benefit. In some cases, home office space, different home office expenses. You can pay others to help you, okay? You can pay your minor children. Great benefit. Oh man, when my kids were home, they all got paid. Auto expenses, someone asked about miles. There's different rules for different ways of doing it. I know you can keep track of miles. I know you can keep track of expenses. I don't know what's better, what's right, what's wrong. Check that out. But I know it's a huge deduction. Travel expenses, when you go to Stampin' Up! Events, a lot of those can be deducted. As you guys know, Creative 8 was just together. That was an expense for me. So I had a lot of deductible expenses because I got to spend a week with Brandy. How great and fabulous is that? So we made it through all 10 pages of my notes. I know that's a lot of information, and I just want to reiterate, I am not here to give you tax advice. I simply want to share what I do and some of my best practice recommendations that will help you keep it easy, keep it simple. I really truly think this is an area that, number one, people are afraid of it, but they're afraid of it because they feel it's overwhelming. And you hear people talk and they just make it so big and scary, and it's not. Keep it simple. So I'm going to hang out for just a little bit longer here and see if anyone has asked any other questions or give you a chance to ask questions. I will watch this Facebook group, not 24/7. I'll make sure I try to check in a couple times a day just for the next day or so, and then we turn comments off. So make sure you ask them. Elaine, I'm a bookkeeper and used to do tax returns. A Schedule C is really easy to prepare on TurboTax. Exactly. A lot of people that do their own taxes use TurboTax. Easy peasy. Schedule C is nothing to be afraid of whatsoever. So, let's see. Anything else? If you're on my team and you have questions later on, please email me. I will help you the best I can. But remember, a lot of times I'm going to say I don't know or I can't tell you. You got to figure it out. Other teams, check with your team leaders and see what they have to tell you too. And again, this was just me sharing my opinions and the way I do things, and I have for the last 25 years. Well, I'm not seeing anything else coming in, so I think I'm going to sign off. I hope this information was valuable to you. For those of you that maybe joined late, okay, make sure you go back to the beginning and watch the beginning, because we really kind of started out with trying to determine, are you a business or are you a hobby in the eyes of the IRS? And that's kind of what drives everything that we do as far as taxes. So until I do a live with you guys again, have a great day.